has ever been so unqualifiedly wrong as the future Federal Reserve chairman was that day. 1973 and 1974 turned out to be the worst years for economic growth and the stock market since the Great Depression. Can professionals time the market any better than Alan Greenspan? I see no reason not to think the majority of the decline is behind us, declared Kate Leary Lee, president of the market timing firm of R.M. Leary & Co. on December 3rd, 2001. This is when you want to be in the market, she added, predicting that stocks look good for the first quarter of 2002. Over the next 3 months, stocks earned a measly 0.28% return, underperforming cash by 1.5 percentage points. Leary is not alone. A study by two finance professors at Duke University found that if you had followed the recommendations of the best 10% of all market timing newsletters, you would have earned a 12.6% annualized return from 1991 through 1995. But if you had ignored them and kept your money in a stock index fund, you would have earned 16.4%. As the Danish philosopher Søren Kierkegaard noted, life can only be understood backwards, but it must be lived forwards. Looking back, you can always see exactly when you should have bought and sold your stocks. But don't let that fool you into thinking you can see, in real time, just when to get in and out. In the financial markets, hindsight is forever 20/20, but foresight is legally blind. And thus, for most investors, market timing is a practical and emotional impossibility.